Get ready to explore Tesla's financial landscape in depth as we unearth important information and interpret the future of one of the most talked about businesses in the world. We will unearth the most recent information regarding Tesla's performance and forecasts in this in-depth research, including everything from production targets and revenue numbers to stock price forecasts and market sentiment. This analysis is specifically designed for Tesla investors and others who are simply interested in the electric vehicle business. Stay tuned as we unveil what lies ahead for Tesla and the direction of its stock price. According to recent figures, Tesla has produced about $25 billion in revenue and over $4 billion in net profitability, demonstrating its impressive success. Strong car sales were the main driver of these numbers. The decline in net margins, which was ascribed to a sharp decline in car prices, is an important issue to remember, though. Consequently, margins dropped to about 14.5%, signaling a change in Tesla's pricing approach. Tesla's stock price may rise sharply in a bull market. According to analysts, it may reach a price-to-earnings (PE) ratio of up to 60, which would mean that the stock price would range from $240 to $250 a share. Conversely, the stock price may fall to as low as $163 a share if market sentiment shifts to the negative. Analysts predict that Tesla's P/E ratio will be between 50 and 60 in the future, especially since the business is anticipated to generate revenue close to $30 billion in Q4. Make sure you have a Wall Street Games subscription before we get deeper into this research, and remember to hit the like and notification bell buttons to receive our most recent insights. When analyzing its first quarter performance, Tesla revealed a remarkable $25 billion in revenue and more than $4 billion in net profitability. Vehicle sales were the main driver of this performance. However, foreign exchange (FX) currency charges are projected to have an influence on the earnings per share (EPS), which came in at $1.30. Due to Tesla's record-breaking quarter in Shanghai, these foreign exchange expenses, which are projected to be over $350 million, might lower the EPS to about $1.19. With no stock buyback scheduled for 2023, it is also anticipated that Tesla's outstanding shares will dilute by about 1% per quarter. Tesla's stock is currently trading at around $180 per share, with a market valuation of over $700 billion and a P/E ratio of 55. Tesla's stock might reach a P/E ratio of 60 if the market stays bullish, which would raise the price to between $240 and $250 per share. Even more optimistically, the stock price may hit $300 if the P/E ratio rises to 65 or 70. The market remains erratic, though. The P/E ratio may fall to 40, which would lower the stock price to about $163 per share if interest rates increase or if pessimism takes over. A more conservative estimate for the near future would be a P/E ratio of 45 to 50, which would correspond to a $204 per share stock price. It is projected that Tesla will deliver approximately 450,000 units in Q2. Production at this level may bring in around $25.5 billion in revenue, with a net income of more than $4.3 billion. Once more, these numbers are anticipated to be impacted by FX costs. Notwithstanding these difficulties, Tesla continues to dominate the EV market, and its financial performance exhibits a pattern of steady development. Additionally, Tesla Energy is contributing more and more to the overall profitability of the business. It is anticipated that Tesla Energy would make close to $250 million in Q1 alone. Market bulls anticipate significant cost cuts, which could lead to an EPS of $1.29 per share and a year-over-year EPS of $4.80. The bulls are still hopeful about Tesla's future growth trajectory and believe the stock price may eventually hit a P/E ratio of 70. A more cautious assessment, however, calls for keeping the P/E ratio at 50, which would translate into a fair stock price of $228 per share for the second quarter. The bulls also think that given Tesla's low inventory levels, price reductions are unlikely and that demand for the firm is still strong. It is anticipated that Tesla would deliver roughly 475,000 cars by Q3. The company's strong market position would be further reinforced by this success, which would probably warrant a higher PE ratio, possibly as high as 70. On the other hand, a PE ratio between 50 and 60 is thought to be more short-term sustainable. For Tesla, the Cybertruck's manufacture and delivery will mark an important turning point. We anticipate that a few thousand Cybertrucks will be operational or prepared for delivery by January 2024. This development will serve as a crucial gauge of Tesla's capacity for production and prospects for expansion. There are still some concerns in spite of these hopeful forecasts. Tesla's stock price may be under pressure to decline if the Cybertruck's manufacturing is delayed or if large plants, such as those in Shanghai or Berlin, are abruptly shut down. The PE ratio may fall to 30 or 40 in such a situation, which would indicate a $150-200 per share stock price. Positively, Tesla is expected to produce and deliver 500,000 cars in Q4, bringing in about $30 billion in revenue. After deducting foreign exchange costs, net income for the quarter is expected to be approximately $4.5 billion. Even in what many view as a difficult economic year, this would raise the 2023 total EPS to almost $5. Over 1.8 million vehicles are anticipated to be delivered overall in 2023, marking an outstanding 41% annual growth rate. By year's end, the stock price might hit $249 per share with a PE ratio of 50. Nonetheless, if the Federal Reserve announces a change in monetary policy and good news dominates the news, a bullish market surge might drive the stock price above $300 per share by early 2024. Tesla would reach a $1 trillion valuation, or a stock price of about $304 per share, if it were to reach a PE ratio of 61. Although this is a lofty goal, it is conceivable given Tesla's steady success and cutting-edge product portfolio. However, projections are not always accurate. Some bulls are cautious and believe that a PE ratio of 50 to 60 is more probable, while others envision a PE ratio as high as 70, which would correspond to a market valuation of over $1.1 trillion. Tesla's stock price is probably going to stay in the $249-299 range for the rest of 2023. We anticipate that the price will surpass $260 by the end of the year, in line with the business's solid financial results and room for expansion. Take these projections with a grain of salt as usual. Even if they offer insightful information, the stock market is erratic, and outside influences can have a big impact on results. Before making any investing decisions, make sure you carry out your own investigation and due diligence. Tesla is well positioned for a bright future because to its Q1 accomplishments, aggressive production goals, and strategic initiatives. Whether you're a long-term investor or just keeping an eye on the EV market, Tesla is still an interesting tale that's worth paying close attention to. We appreciate your time, and for more in-depth financial analysis, remember to subscribe to Wall Street Games. To stay updated, press the notification bell and the like button. I'll see you in the upcoming video.